Good morning, Dornbusch download 113. Andrew, Michael, good morning.
Yeah.
Dowie?
Good morning, Andrew.
I'm thinking, what do I call you? Michael, or do I MKD? Or
I think this market's sort of leaving us a bit lost for words at the moment.
I think you are spot on. Market's lost about 250 odd points over the last, 2 weeks or so. It's really accelerated over the last few days. And I think we could mainly attribute that. I mean, there was a little bit of, not pessimistic news, but sort of average news out of some of the AGMs that have been on. But I think the main reason, of course, is our friend Donald Trumpinator. So what's your take on it, Michael? Is he going to get up? What's going on?
Oh, look, Andrew, I think until maybe a couple of weeks ago, Hillary was looking reasonably comfortable. But since all this email saga's resurfaced again, that's no doubt taken the wind out of her sails. I just had a quick look on Sportsbet, the font of all knowledge. They've still got Hillary in at, I think it was 1.32, her odds are, which is about 70%. But look, the last couple of weeks, since that FBI investigation, a few other bits and pieces, Donald's starting to gain some momentum again.
And it's interesting you raised the odds. I've also been looking at the odds, and bearing in mind Brexit is sort of the low watermark of looking at betting odds, and look where that got us. But you're right, say 2 weeks ago, it was 91% Hillary chance of winning, 91% Hillary, 9 the Don, and this morning it was 75% Hillary, 25% Don. So in the space of like 2 weeks, he's more than doubled. And again, it comes back to this trustworthiness issue that she has, hiding her pneumonia, all that sort of stuff. Now, whether there's any legs to it, we're not here for political comment, but again, it's more so, it's just showing this race is narrowing, and like market was off 105 points in the US overnight because people are going, bother, probably not saying bother, family-friendly Dornbusch download, but they're saying bother, he could actually get up. So, I mean, I know you're not a big follower of US politics, but let's pretend, we fast forward next Wednesday, we're watching CNN and Don gets up. What happens to markets? Well,
look, Andrew, from what I've been reading, anywhere between a 5 to 10% drop seems to be the general prediction. It's just such an unknown quantity, isn't he? At least with Hillary, albeit, again, she has
her baggage too.
She's not pure as the driven snow, as they say, but at least, she's been there. We've got a bit of a feel for how she operates and that sort of thing. Yeah, Don's a real mixed bag, and look, that could be a good thing potentially as well, but I think markets would be very worried initially if he gets the green light, and again certainly 5% drops not out of the question by the look of it.
So and just briefly on that, I think that's because he has much more of an isolationist view. He's going to try and build a wall to Mexico. Good luck with that. Forcing Apple Computer as an example to move their manufacturing plants back to the US, all this sort of populist, isolationist rhetoric. But okay, so let's continue down the sort of devil's advocate path. Markets could potentially drop 5 to 10%, and we're saying there's a 75% chance based on the betting odds that won't occur, but let's pretend it does. How do you as an investor take advantage of that? For most of our clients, it's all part of the ebbs and flows of volatility. You might have some cash back for that type of thing, and you might use that just to buy some shares. So that could be one way of attacking it. What's another way, maybe, that you could sort of take advantage of this volatility, especially if it is that 5 to 10% drop?
Yeah, well, I guess certainly the most common ways, Andrew, and as you know, when there is potential to actually make some money in falling markets. Derivative products are probably the most commonly and widely used. Put options. You can short futures contracts, that sort of thing. Gets a little bit tricky, a little bit complicated. Short selling itself, we don't do that here, but other broking firms around the place do short sell, where they effectively borrow the stock, sell it, and then rebuy it.
Hopefully at a lower price.
Hopefully at a lower price. But one that we've been using a little bit of is the exchange traded fund, the bear product, or the strong bear as well, which is a geared up version of bear.
So there's bear and there's strong bear. So bear, and it's actually wow. So the ASX code for the bear fund is bear. And the ASX code for the strong bear is BBOZ. And in fact, full disclosure, I bought my super fund some BBOZ this morning on the basis of that volatility. So say we bought bear. What are you trying to do? What's the thought process?
Yeah, well, again, Andrew, I guess we're familiar with the term bull market, which is a rising market, and bear market, which is a falling market. So again, they've just named that product accordingly. So effectively, yes, if the thought is that markets are going to continue to decline, the bear product basically has an inverse or an opposite relationship to the ASX 200. So if the ASX 200 continues to fall, in theory, this bear product should rise proportionately.
But it's like one for one, isn't it? So if the ASX falls 1%, bear should go up 1%.
Correct.
And strong bear, for every 1%.
I wasn't going to do the
for every 1%, it's going to be an interesting screen grab at the end. For every 1% fall in the ASX, strong bear goes up 2.5%. But it's really important to note that, and again, Hillary 75%. Let's say that she does win, markets go back up again. ASX goes up 1%, strong bear falls 2.5%. So you are playing with a little bit of fire here with these ones. You've got to have a pretty strong conviction that you think it's going to go one way or the other. B, you wouldn't put a heap of money into it. And C, you'd have a pretty good stop loss strategy. So if it drops by more than a certain percent, 5, 10%, you'd say, right, didn't work, Hillary got over the line, I'm out.
Yeah, it's a good point, Andrew. Exactly right. Speculating on these things is fraught with danger, no doubt about it. But yeah, adding 5, maybe 10% of it to your portfolio, just as a hedging, strategy more than anything. Certainly worth considering, particularly if you are a bit concerned about the events over the next week or so.
And no income. We're doing a great job of selling this, aren't we? No income. Interestingly, talking about ETFs, and we'll wind it up on this thing, we've actually got a couple of seminars coming up towards the end of this month, and one of them is in fact around ETFs, these exchange-traded funds. And that's on the 23rd of March. We've got Tanya from Beta Shares.
November.
It's just the growl that put me on. I just can't get that out of my face. So basically, 23rd November, Tanya from Better Shares is coming up talking about exchange-traded funds. In the US, ETFs are actually the most commonly traded securities. About 80% of all share trades in the US are actually ETFs. And ETFs are really starting to get a lot of traction here. So she's going to come and have a chat to our clients about that. And then on Monday the 28th, we've got the guys from WAM, Wilson Asset Management, which is a bit of a coup, coming to Toowoomba. They're doing their national roadshow, but they're also coming to Toowoomba. They've got about 4 or 5 listed funds. Their most well-known one is WAM, W-A-M, but they recently listed another one called WLE. So Chris Scott, Matt Hoff, a couple of the senior fund managers coming to Toowoomba to talk to the Toowoomba investing public. So certainly come and give us a call. Morgans are also involved, so if you want to give them a call. But certainly if you want to know more about ETFs, the 23 November one certainly would be worthwhile coming along to. So give the office a call on this number and we'll be able to tell you more. Michael, I think we've done enough animal faces and noises for this week.
Anything else? We've outdone ourselves today, Andrew, no doubt.
Yes, a low benchmark indeed. Till next week. Thank you.